Jeremy Allaire, the business leader, internet pioneer, and technology expert. You are the CEO and co-founder of Circle, the financial technology firm that enables businesses of all sizes to harness the power of stablecoins and public blockchains for payments and commerce. Jeremy, welcome.
Thank you, Brian. Really a pleasure to be here with you today.
Maybe tell me if I did, Jeremy, and tell me how you look at this whole concept.
Yeah, I mean, that's spot on, Brian. I mean, I kind of came to crypto and this whole space and really just sort of thinking about the financial and economic system from the lens of the open internet and open internet infrastructure and protocols, and sort of have watched really since I got involved in the internet in 1990, the sort of gradual incremental addition of more and more of these open protocols that are permissionless and people connect to, and that have opened up the world of information, the world of communications, the ability to transact from an e-commerce perspective, software distribution, all of these things that have been made possible. And really in 2012, I became fascinated by Bitcoin, and then crystallized a lot of the ideas for Circle in early 2013. And that was what I saw, right? It was this idea that there's kind of a new protocol layer on the internet. These public chains are themselves almost like, the TCP/IP, right? They're this base layer. Now, I actually think about public blockchains as internet operating systems. These are essentially a new class of operating system that is a tamper-resistant, incontrovertible data, incontrovertible transactions, incontrovertible code. It's a very special kind of operating system that has never existed before, because you've always had to have centralized people running data centers and so on. So this new kind of operating system that you can build protocols and applications on top of. And so what we thought very early on in the founding of the company was, if you saw that technology develop, that you could have a kind of protocol for money on the internet. I used to call it, there needs to be an HTTP of money. So people who've used a web browser and understand what that is, it's a way for us to exchange data in a very simple, structured way, and gave birth to this explosion of all, we can now get all the world's knowledge instantly at no cost. That's pretty cool. So if you had an HTTP for money, that could unlock so much value for people, for households, for firms, and sort of money velocity could increase, which is a key driver of economic activity. And you could actually lower the cost of exchanging value to zero, just like it doesn't cost us anything to exchange data on the internet. So that was sort of the ultimate outcome that we saw becoming possible. And it's been a long pursuit to get there, but ultimately, yeah, USDC is an expression of that idea. And it is, it's a protocol. It has a payload, as we call it. It has a format, which is the dollar today, but it's a protocol also that can support other fiat currencies over time as well. And so that is how we think about it. And when you think about that growth that you just mentioned, the 10,000% growth over the last 2 years, we've added basically about 10 billion new USDC in circulation just in the past roughly 30 days. So it's growing quickly.
I mean, look, what we see obviously is what we saw when we started working on this, which is the internet needs native forms of digital money and native forms of digital currency. And there's obviously pure cryptocurrencies like a Bitcoin, but so much of the world transacts in a every day unit of account like the dollar. And so what stablecoins represent and dollar digital currencies like USDC represent is, how do you take the price stability of the dollar, the simplicity in terms of its unit of account, and give it the attributes of cryptocurrency, which is global reach, nearly instant settlement, extraordinarily cheap, very secure transactions. And that's really appealing. It's sort of a true digitization of money and so on.
Let's talk Bitcoin first. What do you make of what's happened and where it stands right now?
I mean, I think at a very high level, obviously, these kind of crypto assets have grown very significantly. Everyone knows, how significantly they've grown. I think there's wide acceptance that these are here to stay. And these sort of major assets like Bitcoin and Ethereum and so on had a lot of participation and investment into them. And so anytime there's that kind of growth in that kind of speed, and then there's negative news, you obviously see pullbacks in that.
But in terms of the value, when you look at the value of Bitcoin today in the 30s, 30,000s now, do you say to yourself, this is a cheap buy because you're a long-term believer this is going to be worth $500,000, $1 million a coin, as some of the real bulls, the diamond hands would say? Or do you say, you know what, actually $30,000 makes sense to me? Or maybe it doesn't make sense to me at all and I think it's actually worth $5,000.
Yeah, so I think each one of these crypto assets has its own valuation thesis, let's just say, but I'm extraordinarily long on things like Bitcoin and Ether. I think these are going to become more and more important as digital commodities in the world. I think the multi-$100,000 concepts are quite accurate, very likely. And I do think, Ether and what is happening with Ethereum is phenomenal and is very distinct from Bitcoin as well, and has an enormous amount of potential for many, many different types of applications that are built on top. The problem that we set out to solve was, even when starting the company, and then eventually when the technology got to a point where you could actually build something like USDC, was how can you build a protocol for dollars on the internet? How can we actually have something akin to being able to have photos like JPEGs on the internet, or music files, or streaming video, but actually have a protocol where anyone, anywhere connected to the internet can transact with anyone else anywhere, with the backing of something like $1. And that technology really only became viable with second generation blockchains to sort of do it well. And that's when we started working on it 4 years ago and introduced it a few years ago. But a lot of people ask, well, what's the use case for this? And my use case is, what's the use case for $1? And so I really think that it's actually going to have more use cases than existing dollars, because you can do more things with a digital currency dollar than you can with a traditional dollar. We see this even today. You see, micro payments for a piece of digital intellectual property on a network like an NFT on Solana, to people who are using this to settle like billion-dollar trades. And everything in between. And I think, there's been a bootstrapping of this in the capital markets function of crypto. And so it's been really, really important for people who are trading to have like stable settlement, irreversible settlement around the world. I think we're just now starting to see, and we're seeing this in our own business, mainstream institutions, whether they be financial institutions, fintechs, consumer companies, commerce companies, connecting up to this. And I think that's tremendously exciting. And I think the timeline of 1 to 2 years is right in terms of when this will reach many, many hundreds of millions of people, and then eventually billions of people. So I think we're making progress. And then, the payment utility piece is great. And I think our vision has always been that payments is just going to be a commodity-free service on the internet. There's not really going to be a business model in payments in the future.
Your company has decided to come here to Bermuda, which is really, really, it's a big deal, right?
We think so, yeah. We think it's a really big deal. I mean, I think maybe a little context is, so Circle is a company that we started 6 years ago in the cryptocurrency and blockchain technology space, and it's evolved a lot over the last 6 years, and really it's starting to become a mainstream phenomenon around the world, and it's creating enormous opportunities to transform the way that all financial services products are created, and the opportunities that exist for individual consumers and businesses all around the world.
It's very modern, which definitely, laid the foundations for, people like yourselves.
Very much so. I mean, I actually, there's a funny story, which is, I was here months ago and had the privilege of having dinner with Premier Burt, and we were sharing, backgrounds, and I was talking about, technology products, internet technology products that I had worked on 25 years ago, and he's like, "Oh my God, I use those products," and which was pretty unique. I don't meet a lot of heads of state who have used, internet programming languages, have been involved in technology and finance, and so I think he clearly is seeing things that other, world leaders are not yet seeing.
When it comes to cryptocurrency and blockchain, those terms are very, I don't think there's anyone that hasn't heard of the terms, but kind of understanding it.
The way I look at it is it's actually much more like the basic building blocks of the commercial internet going way back. So, back in the mid 90s, there were these new, technologies that emerged that allowed computers anywhere in the world to connect to each other, right, and exchange data and information. And then there became what are called protocols. Most people don't know what that is, the average person, but a protocol is essentially, it's like a language that computers can speak to each other. And so there were open standards for how we could all share content with each other. There were open standards for how we could all exchange an email or a text message.
Right.
And all these were these essentially decentralized systems. There's no company controlling those.
Right.
There's no government controlling those.
Okay.
It's just the open internet. It's permissionless. It's decentralized. Anyone can join, anyone can communicate, anyone can share information to anyone else that connects to it in the world. And that model,
there's a whole thing on the West Coast about Stanford and Bitcoin and the Bitcoin group there. I think it's a bunch of crap. It should be MIT, focused on disrupting the global monetary system and currency platforms that we have today. So I'm looking forward to hopefully getting to know more of you. I've been building internet software platforms and online services for about 20 years. My background before doing that was in international political economy, studying economics, political science, and philosophy. Those degrees weren't per se that useful when I started my career, but I think ultimately very helpful in how I think about the role of the internet in transforming society and the economy. I had been exposed to digital currency and broader concepts of digital currency for about 10 years, but then very specifically Bitcoin and what Bitcoin was accomplishing organically about a year and a half ago. And about a year ago, I was able to really go much deeper on that. And I sort of went down the rabbit hole, haven't come back out yet. And I became very, very compelled by what I was discovering. We have a foundational platform that integrates that society, which is the internet, and the ability to have instant communications, instant media, instant knowledge discovery at effectively no cost. And that's driven an increase and a kind of increase in the velocity of human interaction around the world. When you conceptualize this as a sort of decentralized, distributed, general ledger that can be used to demonstrate ownership with a system of trust around it, that can be used in a lot of ways. So there are some concepts that are out there that people talk about. There's the concept of colored coins. Think of it this way: if you've got a small unit of Bitcoin and you can attach some metadata to that small unit of Bitcoin and quote unquote color that coin, and you have the ability to then, in a cryptographically verifiable manner, transfer ownership of that unit from one person to another person, then you have the ability to manifest forms of essentially title and property transfer in a decentralized, distributed manner that works anywhere in the world. And so a lot of people are starting to think about how can you use this distributed ledger and this digital bearer instrument to manifest forms of smart property, to manifest forms of representing title to objects, whether they be virtual or physical, and to make that work on an international or domestic basis. So there's some really exciting things that can be done with that, and that's really basically possible today on top of the stack that's there. There's some other concepts, which is, built into these protocols is a mechanism to execute script, and specifically, it's a set of code that runs that handles some of the specific kinds of transactions that the Bitcoin network handles today. But that's somewhat constrained in what it can do. But even what it can do today is still powerful. So for example, if you wanted to have a transaction which involved multiple parties and multiple signatories, you can do that today, such that if you wanted, I'll just use a basic real world example. If you are parents and you have a kid and you want to give the kid some money and you want the kid to be able to spend money above a certain threshold, but if they want to spend money above a certain threshold, it requires at least 2 or at least 1 signature from a parent. Then you can manifest a kind of financial contract between parent and child that is enforceable over this network, again, without a centralized authority to manifest that.
Yeah, I mean, so we've been in the crypto space for about 6 years. And, sort of maybe just going back, when we started the company, the thing that got us really excited was this idea that effectively like new protocols would emerge for value exchange on the internet that would make it possible for people everywhere to exchange value with each other at the speed of the internet in the same way we can share data and content. And we've been pursuing that obviously for a number of years. I think ultimately we're interested in both how does what we think of as traditional kind of payments and banking become crypto native and be open and accessible, sort of the open finance concept that a lot of people talk about. And then further, how do businesses ultimately use this as a way to raise capital, enter into economic arrangements, other things. So the kind of big picture that got us interested, we've had lots of iterations, products, pivots, businesses we've acquired, businesses we've spun out, like other things along the way. But I think the interesting thing is now 6 years in, the technology, things that we're working on, but then more broadly, is finally getting to a place where we can actually implement this more open financial system, built on crypto native infrastructure.
So how does that work for the company? So does that mean that you can kind of put aside, say, 20% equity that you would like to bring to the platform, and the market decides what the price is, or do you issue a price?
Yeah, no, you issue a price. Yeah, and so one of the things that what we do is we help the company figure out like what's the structure of the offering, what's ultimately what do we think the right raise is, how do we think about valuation. They may have a specific view on it and want to be executing that, but we're only going to take on a project if we think that we can fill that deal, basically. And so we've got a large base of investors that have already invested into deals on our platform, and that just grows every time we add a new deal to the platform. And sometimes these are pieces of capital that a company, maybe they've closed some capital from angels or VCs, but they want to have a piece of it that they can sell to the crowd. And so they'll put that piece to the crowd through our platform as well.
Is Bitcoin worthless?
I don't think so. I'm very much in the view that non-sovereign digital commodity money plays a really important role in the international monetary system, will grow in importance. I would expect over time a very significant number of governments will hold Bitcoin as a reserve asset. I think it is to me a sound money that is not controlled by any particular corporation or government, that has a fixed supply, is digitally scarce, secure, private, and decentralized, is an extraordinary innovation and is likely to continue to grow. And not just Bitcoin. I think Ether, for example, is also an extraordinary innovation in non-sovereign digital commodity money as well. And I think this category of monetary instrument, I suspect, will be larger and larger over time.
What would you say to them about what they could potentially be missing about the future of decentralized finance?
Yeah, I mean, I actually think it's pretty straightforward, which is that the technology of crypto as a technology and these sort of public network infrastructures that are being built up around it represent as significant of an infrastructure upgrade to the internet as the web was, as the smartphone was. These are very, very powerful general purpose infrastructures that for the first time ever give us an opportunity to more safely enable economic activity to happen directly on the internet, economic and financial activity to be happening directly on the internet. And so I look at this as the beginning of the development of the new economic infrastructure of the world. Just like the internet became the new infrastructure of information and communications and data, this is the beginning of a new infrastructure development for economic activity and governance activity in the world. And so it's that big. It's going to create many trillion-dollar companies over time.
And I was very appreciative of Undersecretary Liang's testimony. I think she is doing an excellent job of thinking through for the U.S. federal government, and obviously shepherding a lot of other parties around this, what's the right approach to supervising and establishing a framework to regulate firms like Circle. And I think we have obviously come forward and are in the process of looking to become a national digital currency bank. And we believe, of course, that dollar digital currencies that are operating at internet scale, that work, to improve both not just payments, but overall kind of financial and economic system improvements. It's a huge opportunity for the United States. This is here to stay. This is growing. And I think there's an acknowledgement that there's a here and now, and that's very apparent to a lot of people. And then there's some theoretical things, like theoretically there might be, a government project in the future. And I think across the board, I think increasingly people, including in her testimony, in the Undersecretary's testimony, is very clear that these innovations are going to coexist. We've got a lot going on, which is one just general the physics of everything that we're doing. I think the second is I think the government, the federal government, I think is coming up to speed on stablecoins, blockchains, digital assets, the sprint, as I know you were referring to before, and I think are just trying to understand, okay, where's this going to fit in terms of the kind of charters that might apply? And there's open questions, and this was also in, I believe, some of the Undersecretary's testimony about, this isn't necessarily about FDIC insurance for a fractional reserve bank, but is it possible that there is some insurance framework that's more specific to the risks of the reserves and liquidity of a stablecoin? So there's things to work out, and that will take time, and it'll be, I hope, collaborative as I think both the U.S. government and private sector try and figure out how to do this.
Where do you see the U.S. right now in the digital currency space race, and how do private stablecoins fit in there?
I mean, our view is firm, which is that the U.S. is winning the digital currency space race. Today, the preeminent digital currency on the internet is the dollar. Just looking at USDC alone, there are hundreds of different digital wallets that support this in hundreds of countries around the world. Exchanges all around the world support convertibility of this. It supported $2.4 trillion in transactions on the internet last year, and it's really growing, and there are robust and growing ecosystems around it. And so I think the U.S. is winning. I think the question is, can the U.S. really get some energy behind this and ensure that this kind of market competitive open model, which has been, I think, how the West has approached the internet over the past multiple decades, can they approach that in the convergence of the internet and the financial system?
Maybe there's something to this. Where do you land on all this?
Well, I think the analogy a lot of people like to use is that we're still in the early days of this technology adoption, and it's similar to the early days of the commercialization of the internet. And I think that's pretty accurate. And I think in some ways, if it was 1998 and you were saying, hey, this web thing is really going to drive a lot of value, but some people would say, well, it's overhyped and it's not really going to deliver. And there may have been a bubble then. In fact, there was a bubble. But if you had invested in the key infrastructure companies, platform companies at that time, it would have realized enormous gains.
Okay, so now you're talking your own book. So no, in part because of what Circle does, and we should probably explain what Circle does. But just on the currency piece,
absolutely.
On the currency piece alone, which is to say, is this the tulips of our age?
Yeah, I don't think so. I mean, this is a fundamental breakthrough in how record keeping and the settlement of transactions happens in the world. And it is going to touch every fiduciary industry that exists in the world and improve it and automate it, drive value. And it's tokenized, meaning that there are assets that power these platforms. And so I think the question is, how broadly do these platforms get used to replace fiduciary trust applications that exist today with people and paper? And as that takes place, as these ledgers and the transaction systems they power grow, what's that asset
for those
worth?
of us who don't understand it, I want you to take it down literally to like first grade level here, okay? Because honestly, there's a lot of people in the world, including myself, on some of these issues that still don't get it.
Yeah.
Let's just do, what does Circle do first?
Sure. Yeah, so Circle has a few things that we do, but the primary thing that we have is a free payment app. So if you want to pay someone anywhere in the world instantly, without fees, without FX margin, you can do that. You can think of it as like a global, open alternative to an app like Venmo, but it works using cryptocurrency technology, and it works across currencies.
How do you make money on that if you're not charging me fees?
We don't make money on that any more than Google makes money on providing a search engine or email services, or Facebook makes money sharing photos.
The way you make money is then doing what with that information?
So the strategy we've always had is how do we drive a lot of adoption of these free products, and by building on top of crypto, there are other products that we can offer to consumers that are based on crypto, but other financial products. So we make money by trading in crypto itself. And so we make considerable amount of money doing that, and providing liquidity to the market in crypto. And we're working on a new product, our next major consumer product, which is a way for the average retail investor to invest in crypto assets.
But it's got to be a lot trickier when you've seen these skyrocketing prices for Bitcoin and then the plummet that goes through. In fact, you're not doing what you used to do with that anymore, right?
We never created a model that depended on the price, right? It was never a critical piece to it. What's important is that there is a marketplace and that there is liquidity and that it is a tradable asset.
So that's the question, though. How much liquidity is there? People say all the time, yes, you can buy in, but if you actually were one of these people who invest in and now you want to get out tomorrow and you want to sell a lot, that actually is complicated.
Well, that's where folks like Novo and others that are moving large blocks come to liquidity providers. Circle is a liquidity provider. There are others. There's a company feature in the Wall Street Journal yesterday, DRW, which is that. And the market's maturing. Obviously, other traditional broker-dealers are getting into this space.
And we're hearing about the Goldman Sachs and JP Morgans who may get into this space. Again, go first grade level for us, if you could. Just the difference between Bitcoin and Ethereum, just so everyone understands it one way or the other.
Sure. So, of course, Bitcoin was the first cryptocurrency that gained some widespread awareness and adoption. And people like to refer to it as a digital gold. It is a system to store and transmit and keep records of Bitcoin. Ethereum emerged out of frustration with the pace of development of the Bitcoin technology. So engineers were frustrated and wanted to see some new capabilities in crypto. In particular, the ability to not just have one token, but to have a system that could have lots of different tokens. So you could.
Looking ahead, what is coming up for Circle? You're going public with the merger with a SPAC that values Circle at about $4.5 billion. Tell me a bit about your path going forward and your vision, your journey of becoming a bank.
Yeah, I mean, there are a lot of pieces, obviously. Earlier this year, we raised $450 million, and so we're in significant investment and expansion mode, building out different product lines of businesses. Obviously, there's a process of becoming a public company, which is a journey we're on, and that will take whatever time it takes. And then yes, I think as we've looked forward and we've thought about ultimately the nature of a global scale stablecoin such as USDC and the other products and services that we ultimately want to build around it, we made a decision that we did want to pursue this path of becoming a national, full reserve digital currency bank, which hasn't been done yet. So it's going to be a journey. I don't expect it to be a quick journey. But we're excited about what that represents for the industry and ultimately what we can build.
And what kind of insights are you getting at this conference?
It's amazing. I mean, I wouldn't have expected a year ago or 2 years ago that SALT would be overrun by crypto firms and being on the agenda and everything. I think it's been really interesting. I mean, so many funds, investors, family offices, others not yet in the space, but really trying to figure out how to get active in the space. So I think it's a learning curve for a lot of people. There's so many new things, DAOs, NFTs, DeFi, what is this? I think people are finally getting their arms wrapped around, I could have an allocation of Bitcoin in my portfolio, but then when you open the kind of Pandora's box, it's like, wow, there's so much there. So I think people are really just trying to get their head wrapped around all of the dynamic things that are happening.
And do you feel that the way USDC has been structured and the operations behind it has been more geared toward alleviating the concerns of risk for those types of investors?
Yeah, I mean, I think there's folks that want to actively own something like Bitcoin or Ether, and then, through USDC yield products, there's a way to participate in the market without directly, purchasing something like Bitcoin, and I think that's attractive to a lot of people. I think we're just listening, clearly to the market and what the market is looking for in this space, and also, I think, getting a little bit of a sense from comments from regulators on where they think this ought to go, and really just trying to be lined up with market expectations.
What do you say to those concerns by some lawmakers out there that there could be a loss in confidence of some of these stablecoins and a run on them?
Yeah, I mean, this is going to get into ultimately if there are that get developed, that have to do with fundamental liquidity. I mean, obviously there is a framework for that through Basel III, and how that framework can apply, whether it's to banking or a stable coin. And so I think everyone is just trying to get their arms around